Morning, it's Brian. Hope you're doing well today. It's Friday. Yeah, Friday the 26th. You know, it's Friday because I look like a hobo by Friday. Anyway, um, here for just a quick live update in the morning, get an idea of what areas we're looking at, what things are going on in the market, um, what areas we might be trading from, you know, if we have trade opportunities for the day. So let's go ahead and get into it. First thing, I just want to pull up over here on this screen right here. We don't have any high impact news today, but we do have some medium impact news on some fairly key indicators that can be seen as leading indicators, actually. Looking at personal spending and consumer sentiment. So these, while they're not red reports, and red report typically is a very high impact, something that has like an immediate market impact. Like this morning, used to be President Lagarde was speaking. When Mr. Powell speaks, it's a high impact report. Non-farm payroll, high impact reports, right? Things that have almost an immediate opportunity or potential to add, to change potentially direction in a marketplace. It's a catalyst. Right now, we've been in a kind of interesting spot. We've hit a bit of a range. There's if you look at the S&P, for example, we're in about 100 pip range, 150 pip range, where we're just kind of sitting in the middle of this top and bottom that have been established. And there's a lot of decision points in the market coming up. There's a lot of fear, it seems like, in the market. There's a big disconnect in the market and in reality. I think a lot of people feel that. So we're in an interesting situation where, it could really go either way. I guess it can always go either way, right? It can always go either way. But this seems to be one of those tipping points where we're hitting a bit of a range, and things are either going to get better and we're going to break out, or we're going to have some news that just, further feeds some of the fear and pushes us down. The big thing is, don't try to front run it. We all have our opinions around what we think is going to happen and where things are going, but at the end of the day, we need to trade what's on our charts. That's the only constant, right? Is what we're seeing here in our charts, and it gets frustrating sometimes because we get in these periods of chop, right, where it's just going flat, and the opportunities aren't maybe as, what's the word I'm looking for? Word just flew out of my head. The opportunities aren't as plentiful maybe as we'd like them to be, but that's okay. It's better sometimes to not be in all the time. To wait for that proper setup, and then if we get it, then we take action. We had a trade yesterday on the S&P just before it reversed, very heavily. We had a trade yesterday in the S&P. We picked up a little over 4.5%, a little more than that. So great day. But we didn't have trades before that. It had been a while. So just keep in mind, we've got to be consistent, work the plan, let the plan work for us, right? So with that said, let's go ahead and jump over here and look at the markets. Starting off with forex. What are we seeing over here in forex? Well, we've got some divergence here. We've got a weak currency, which is the pound. We've got a strong currency, which is the yen. Despite the fact that they've been moving apart from one another, the pound's been weakening, the yen's been strengthening. There hasn't been a whole lot of momentum behind it. I mean, coming into right now, into the morning, we've moved 93 pips for the day. Average is about 150. So certainly you would think we'd see some additional movement there. Yesterday's range was super low. We took a trade yesterday on a breakout. It moved in our favor and then came back and stopped us out for a loss. Smaller loss than we had planned to take, which is great, but a loss nonetheless. But then it ended up staying in about an 80 pip range. It was really, really a small range. Just looking at mean reversion, I mean, there's high chances, high probability of that breaking out, even if you did a breakout on the top and the bottom of that 80 pip range where we were yesterday. There's a pretty good chance it's going to move, right? So anyway, this morning, looking at the pound, looking at the yen, it's a fairly volatile currency, and it's it's one of those where we typically have some movement. It's fairly volatile, and we can see right here, we've got this moving. I placed an order as the session began, as we had this divergence occurring on the bottom of this breakout. So if it moves shorter, it'll continue with that current trend and see what happens. So it's just now touching us into this trade at the bottom of that breakout box. And the reason again for taking it is pound is moving to weakness, yen is moving to strength. We can see that we're in a bit of a downward trend already, so it's going in line with that. The current day's range, we've moved 90 pips. The average is about 150, so we've moved a small portion of our typical range, and there's a fairly high probability that it would continue to move on and have that opportunity to at least move the additional 20 or so pips that it needs to move in order to get us into profit on the trade. Now, as I always say, does that mean it will continue? No, absolutely not. It doesn't mean the direction is going to continue. It doesn't mean that it's going to continue on. Just like we saw yesterday. I mean, it only moved 80 pips and ended up doing something highly unusual. But remember, ranges are made up of that. A range is this because sometimes you're going to have days where it might move 200 pips, and there's going to be days where it doesn't move, like yesterday. That's all right. That's all part of it. We have to accept that's just simply part of trading. So anyway, entered a short trade here. We can see we've got the pound continuing to push to weakness, yen continuing to push to strength. We'll let that continue to do what it needs to do and see if it can push us into profit here on that one. The way this works is, using the breakout box, every pip that it moves in my favor, we're going to ratchet off risk. So it'll continue to ratchet off risk here as it goes along. All right, so next up, let's have a look at the futures market, see what's going on over here in futures. Yeah, this stuff over here, we get this out of the way. Okay, yeah, I'm sorry for the box. I'm using a different platform than I had been using previously for the broadcasts. All right, so what's happening over here? S&P. Mixed bias coming into the new session. We'll see where it goes. It's Friday. As I mentioned, we've got a couple of pieces of news coming up. One here in about 15 minutes and the next at 9 a.m., so 10 a.m. Eastern. So we've got some news coming up today that could potentially be a catalyst, could cause some volatility in the marketplace. We'll see how it all plays out. But as we're getting things started right now, we're in a mixed bias. The 4-hour bias is short, but the 30-minute bias is long. Now, very possible by that time we get to our regular trading hours here in just a little bit, this may flip over, and especially if we close down below 36 here, get down near 30.60, more than likely the 30-minute will close to be a short bias as well. But we need to let that happen. What we don't want to do is trade based on what we think is going to happen, or go, wow, it's almost there, let's just go ahead and take the trade. It's almost there. That's that slippery slope we've talked about before. When we start doing things that deviate from the plan, it makes it easier to have greater deviations in the future, right? So if today we go, well, the bias on the 4-hour is short, and the bias on the 30-minute, it's flat, but technically it's in a long position, but I think it's going to be short by the time we get to the regular trading hours. I'm going to go ahead and start looking for shorts now. If we do that, we're not really following the letter of our plan. We've bent it just a little bit, and then at that point it makes it easier and easier and easier to make those bends, those tweaks bigger and bigger and bigger. Well, I might use a larger percent of risk, or I might do this, or I might do that, or whatever. Just keep that in mind. If the bias is one of the main drivers for the direction that we trade, we need to keep that in mind. Now, with that said, there's nothing wrong with looking for counter trend trades. There's nothing wrong with looking for opportunities that might be slightly different than what the directionality of the plan says, or whatever it might be, as long as you plan those in advance, right? And we haven't gotten into that at all. We've been talking very specifically just about one direction. You know, if we've got a long bias in the 4 hour and a long bias in the 30 minute, we're going to look for longs. If they're both short, we're going to look for shorts. Now, obviously, there's opportunity to add to that and have other pieces of the plan available to us. We haven't talked about them because it's a slippery, that again, kind of a slippery slope, right? Especially what I find is when folks are trying to get a foothold, whether you've been trading for years or you're just starting out, the more simple you can keep things and the more kind of focused on just one direction we can keep things, the better off we're going to be, because you need to get one thing down before you move to the next, right? You know, if we're trying to master trend trading and reversals and something else, we're never going to be good at any of them. I prefer, you know, let's focus just for a while on just trading the trend and seeing, you know, showing that can be profitable, proving that that's a method that deserves your attention and your support, right? Then when you're good at that and you can consistently do that, then you can start adding other pieces into the puzzle and then focus on that next piece and get good at that and build from there. But don't try to do something new until you're proficient at the first thing, right? You know, so anyway, getting off on kind of a tangent. We'll eventually get to that and talk about other things that we can build into our plan. But for right now, let's just keep it simple, right? Long bias on the 30 minute, short bias on the 4 hour, they're mixed. That tells us we don't do anything until the biases come into agreement with one another, right? So we'll stop there. Over here on crude, long bias on the 4 hour, long bias on the 30 minute for right now, but it certainly is breaking down. And as this closes and we open here in the future, we'll probably see definitively this crossover. And as that occurs, we'll have a conflicting bias between these two. But for right now, they are both still in a long position. So we could be looking for long trades as we get further in on this. We are coming to an area here at 38.40 that you know, had seen some previous resistance up here, broke it, you know, resistance broke through it, coming back and retesting this area. So this could certainly be a potential area of opportunity for us. Of course, if it does go long, you know, looking for breakouts, we probably want to look up here at you know, 39.25 as a potential breakout opportunity for crude. But if this finishes and it crosses over, we're going to have a conflicting bias here as well, and that would tell us just to sit on our hands. Don't do anything until that comes into agreement. We have a directional bias that's consistent across multiple time frames. Right? Over on gold is right now technically mixed as well. You know, so it's a mixed up market, which I think is a great way to look at things, because that overall, if we look at everything that's happening in the world, we're in a mixed up world. So when I have a mixed up market, but gold is long as well on the 4 hour. On the 30 minute, technically it's still short. So if this stays down, obviously we won't have anything to do until we get the 30 minute crossing above here and we see the directional bias on the 30 minute come into agreement with the 4 hour. That said, you know, key areas, 1775, big area for us, 1776, you know, is what it's labeled as here, 1775, 1776 as a top level to break through would be a great spot to potentially look at buy opportunities. But again, we need to see this break above and cross over before we really have that opportunity that's supported by the confirmed directional bias on multiple time frames. The whole point of everything that we look at, just as a reminder, it's all there as filters, right? There's endless possibilities when we look at the market. There's endless possibilities. Anything we can always find a reason. Anytime you sit down, walk in, pull up a chart, you can find a reason to trade. So the whole purpose of adding indicators to it, or adding any kind of a support or resistance line or trend line or any of those things, It's all looking at what's happened historically, and maybe it's what is happening up to this moment right now. We put a filter on it in order to try to say, okay, what are the key things that I need to see occur historically and up to this point in order for me to feel comfortable taking a trade. And it's all there just to simply give us a little bit of an edge on the marketplace. If we see X, Y, and Z happen, then we're comfortable in taking a trade. If X and Y happen but Z doesn't happen, then it hasn't confirmed everything that we need to confirm. The filter, whatever particle that is that needs to seep through the filter system, hasn't seeped all the way through. So if it doesn't meet all of your criteria, if whatever indicators or whatever setup through the indicators you're trying to filter the market, view the market through, if it hasn't met all of those criteria, it hasn't come through the filter. I think is a kind of a good way to look at that, because that's what has to happen. If you were drinking water, if you had a life straw, and you're out and you find a puddle of water you're about to drink, and you go to take the sip, and you're not and something's not coming through that life straw, would you trust just to drink it, without the filtering mechanism? Probably not, because who knows what contaminants. There's a reason for why it didn't get through that filter system, right? There's a reason for why it didn't make it all the way through and give you any liquid. It's the exact same thing with the marketplace. If you've got a filter system that you've put on the marketplace through indicators, and everything isn't met, everything through that process isn't met, why would you take the trade? It's the same thing, So anyway, that's a kind of big reach between those two. But anyway, I was in a sporting goods store yesterday, which is probably why I've got the life straw thing on my head. So anyway, that's crypto. What's happening in crypto? Big move down again in crypto. Here we go over here. So just looking at Bitcoin and Ethereum, we pulled back again, but right back to these key areas. We'd come up to 245, and it's been a huge point of resistance for us here on Ethereum. Hit it, and it's pushed back down, as we know, yesterday. And now today we're just hovering around this 230 area. We're just, this seems to be a great bottom level, this bottom edge, 230. Just staying right in this range. If we can break below here and close below, we could probably see it, continue to move lower. Right now, until things, it's going to take us a few more bars of being down here. But for right now, the bias on Ethereum is still technically long. So we would still look to buy off of these bottom edges. So we could be looking to buy off of 230, or if we break higher, we could be looking at breakouts, maybe above 235 or even above 240 if you really wanted to be more conservative there. So there's opportunity here, but for right now, we would still be technically looking for buying opportunities. I do think that the better play for this is to look at both directions on it, because it could go either way, especially if the bottom falls out of the market. Just looking at indexes, if the bottom falls out over there, the bottom more than likely will fall out over here too. So we'll see what happens. Same on Bitcoin. Looking at Bitcoin, we came down to a key level. We've been hanging out here at this 91.75 area. It seems to be our bottom edge. We're kind of touching in here. Bitcoin has flipped over on us. The bias is short on this. So in this case, we'd be looking for pullbacks, up to maybe 9,300, 9,320 as pullbacks, looking to go short off of that. Or we could be looking down, down here below 9,100 and see if we break through that and take it short from 9,100. So that's pretty much where we are on the crypto side of things. So I think we've hit it all. We've talked about forex. We've got a trade rolling over here on the pound versus the yen. We've got we talked about directional bias on the S&P, the crude, the gold, and talked about what's happening in Ethereum and Bitcoin. So I think we've hit them all. That gives you some ideas around what we're looking at, how we're trading it. The way I'll approach the intraday trades, if the biases line up. So first thing, the first set of filters is directional bias. If those line up, then we can start looking at trading opportunities. It would be that if we're going long, we're going to look at key areas. If we're coming to a key area, if we're going long and we're pulling back to a key area, that's a significant level on the 4 hour and we can't break through it, we'll look to go long from that, or we'll watch for lower highs and then trail our buy level down off the top of those previously closed candles of the previously closed lower high. And again, I trade for the first couple hours of the morning. If it doesn't touch us in and it just keeps going down, then we're out without a trade. And we might be out without a trade anyway if the biases don't come into alignment. So that's it. All right. We'll give an update if there's anything to give an update for. All right. Have a great day. We'll talk to you later. Bye.